Well, hello there. This has been a terrible year for investing, hasn't it? Everybody has been losing quite a bit of money. But I wanted to actually talk today about index investing. It's actually a brilliant strategy, but nobody on YouTube really talks about it, except for a few people, because that's really kind of boring. Most people, they just want their quick money, and so they're actually giving you stock advice to buy Netflix. That was a famous Jim Cramer call before. In January, before the stock went down 75%. There are a lot of stocks are down 70, 80, even 90%, but indexes are not down anywhere near that. S&P is down around 13%, Nasdaq is down around 22%, but this really kind of masks the fact that some of these stocks into indexes are doing pretty badly, and I think that's why a lot of investors actually are under pretty sour. I think that's one reason why there are a lot of people in kind of in a sour note right now, is the fact that they have lost a lot of money, and it's probably way more than indexes. And the problem with choosing individual stocks is that there's no real guarantee that these stocks will ever go up. You really have to carefully manage these stocks if you actually are invested, and you really have to have like a sell rule. If it goes down 6 to 8% from where you bought it, you really have to sell it, because oftentimes these stocks just don't really tend to improve. What happens is that you say, well, it's down 8%, but I'm going to give it another day because I think it will improve, and then it gets worse and worse, and then at some point you're saying, damn, is this ever going to turn around? And the truth is, there is no guarantee at all that any individual stock will ever recover, and that's why it's considered a more risky strategy than index investing. In fact, oftentimes when it comes to stocks, it's best if you are not invested at all during earnings. Like, they call it earnings roulette, because if you just hold your stock during earnings, it could jump up 25%. It could also plummet 30-40% if the earnings are bad enough. And you don't get this issue with index investing. The S&P is not likely to drop 30% in one day. I don't think that's ever happened. And not only that, you don't have to worry as much about earnings, because since it's diversified, any one company that misses earnings or something like that, even if it's a big company like Amazon or Apple, is not likely to impact it dramatically in the same way that if you own the individual stocks. So this is like one of the most important time periods ever to realize that there are safe ways to invest in the market. I know it's pretty boring though, because it just is a lot more exciting to talk about the individual stocks in the market and say, hey, look at this new biotech. They have some new pharmaceutical idea, or think of Netflix. Don't all your friends watch movies, and we're going to get every single person on the planet subscribed and paying money? Well, at some point in time, a great stock will actually reach its limits. It can't get any more subscribers. It just can't. Now it has to focus on trying to get subscribers with ads, and then as soon you're going to be offering maybe plans for like $1 in certain poor countries in order to just get more and more subscribers, and then they have to keep producing the shows, because now they're cutting back. Netflix is an example to show you why this particular stock might continue to go down. They have to keep pumping out new shows, but there are less subscribers, so there's less money. And then if there are less shows, then you don't want to subscribe, and it's a rolling effect. So that's really a bad one to own. But the goal of investing is not for things to be exciting. Too many people want a little bit of excitement, and I think that's one reason why so many people are invested in individual stocks. I must admit, I used to be like that. I was actually telling people about MasterCard, Visa, and American Express, but you know what? I'll even admit these stocks have underperformed the 220 bull market that began. I don't know why, but these you would think that these could do very well, but the truth of the matter is they were actually definitely underperforming the indexes, which shows that no matter how much research you do, you could still underperform the indexes. And in fact, most hedge fund managers cannot beat the indexes. I cannot beat the indexes by picking a few stocks. So the truth of the matter is that it's a way better idea to almost own all the stocks and to have the discipline to focus on the big picture. That yes, stock prices will go up and down, but if you look at the long-term trajectory, about like 100 years, every tiny blimp, any type of downturn on the stock market, it actually just looks like a little tiny blimp in terms of the long-term picture. That's a comforting note. In fact, the only times you really notice it on the long-term chart is if like the Great Depression, you can definitely see that. But every other bear market, it's like a little tiny blimp on the long-term trajectory of the stock market going up. So I know it's been a tough 4 or 5 months for a lot of people, and people probably at some point in time they probably are going to wonder if they even want to be invested at all in the stock market. But the interesting thing about markets is that just when everybody wants to literally give up on investing at all, they just think, does this actually even work anymore? Does it make sense to put my money in something that is not rewarding me, and it's just very depressing, just not seeing any returns? The truth is, that's exactly the time when we start to usually see things turning around. I can't say when exactly that will be, but usually it's when the sentiment is really negative that we actually start to see that there's a turnaround. So a lot of people, one thing you'll notice, I don't really see anybody pumping out individual stocks like the Netflix or the Peloton and things like that, or there was Pinterest for a while, or a lot of these kind of things that were very hyped very heavily, but they didn't pan out. Nobody was really hyping up Vanguard because Vanguard wasn't paying them, and that's not very exciting. But my channel isn't exciting. I'm just trying to provide common sense advice, and the truth is that's really the only roadmap that makes sense, to focus on the long term and try to be diversified, because especially in this market, there's no way you're going to be able to pick an individual stock and know which way it's going to go. Anyway, I'll see you in the next video. Click like and subscribe, and I'll see you in the next video.